All right, welcome everyone to a very special webinar. We only offer this opportunity, it's pretty rare. We might offer this opportunity one more time this year, but that would be it. At the very most, twice a year would we offer this out. So the Double Eagle, call it the best kept secret in the world of options trading. And it's true. I believe that is true because even though it has so many attractive qualities, it goes unnoticed and virtually untraded. And the reasons are simple. But first, let me get through the mandatory legalities here. Disclaimer tells you quickly that Options Enterprise and OptionsSlam.com are not broker dealers. I am not, and my partners and associates are not financial advisors, nor are they registered investment advisors, nor do we provide investment or financial advice or make investment recommendations. The webinars are provided for educational purposes only, etc., etc. Please finish reading the disclaimer, and please read and understand the CFTC rule before you risk your hard-earned money in the markets. I am Marco. I am the founder and CEO of DoubleEagleWorkshop.com. I am an owner of and CEO of OptionsSlam.com as well. OptionsSlam is a separate website that focuses on earnings trades and focuses on stocks at and around their earnings events. Let me introduce myself just a little bit. I've been trading options for over 20 years and educating others in the field of options strategy for the most recent 16 of those 20 years. I've taught through many venues. I was the founder of the Market Student Yahoo group way back in the early 2000s. I'm dating myself here. I know I don't even think Yahoo groups exist anymore, but we quickly grew to a membership of about 1,900 members in that group, and I taught classes there every week. And I taught classes over at Grand Valley State University here in Michigan, at the Grand Rapids downtown campus. As a guest appearances, I've had many guest appearances on other websites, including the Raleigh-Durham Investors, Aramir, SMB University, OptionView, Capital Discussions, and others. And I've been trading the Double Eagle for many years. I actually started trading the Double Eagle before they even had weekly options. So I began sharing my knowledge about this unique trading strategy pre-earnings. It's a pre-earnings strategy, by the way. I started teaching it officially as a class. Well, we're on an anniversary here. March of 2016 was when I had my first Double Eagle class. And many of the traders who were in that first class are still with me today, still trading the Double Eagle. So this was before the strategy even had a name. But it has been my core strategy ever since. And many of my first students, some of them are even here tonight. So we have developed a set of tools that makes it viable for any options trader to engage in the Double Eagle. So here we go. Today's webinar is a promotion for the Double Eagle workshop, which will begin this Saturday. It is a paid workshop, and even if you don't attend the workshop, you will find your time here with us tonight worth your while, I'm sure. I think I bring a new perspective to the world of options trading that many other traders really have a hard time seeing. So stick with us, even if you don't think that you want to get invested in a paid training. I think you'll find your time worthwhile here. The Double Eagle can be traded in all market conditions. Let's see, seven sessions altogether. So there's 7 sessions. They're scheduled for 2 hours each. This is an intensive course. It's very comprehensive. It not only teaches you about the double eagle trading itself, but it teaches about all other aspects of trading because, well, we'll get into that Saturday. Because we have to, because we encompass almost anything that can happen in a trading scenario when we're trading the double eagle. So we need to be aware of all the things that can go wrong so we know how to handle them. So the sessions will be on Mondays during market hours, and you do not have to attend them live. The Saturday session, as well as all the Monday sessions, are 2 hours long. Well, they'll be longer than 2 hours. I promise you that, because we always go over. We used to do it in 3-hour classes, but it just got to be too long and too much out of people's day. So what we did is we extended. We have more classes now, but they're only 2 hours. So you do not have to attend live because they are all recorded. We have back. So you will have a permanent record of all of the recordings, and you'll be able to go back to them 2, 3, 5 years from now, and to refresh your memory on them and that. Okay. I get asked this question, Marco. If it's such a great strategy, how could it possibly still remain a secret? I'm going to divulge why it's been kept a secret for so long and why very few people trade it. That's one of the goals of this webinar tonight, to show you and prove to you that that it is a secret. Very few people know about this strategy, and very few people trade it. And you'll see why. Hang in there. There's two main reasons to why the double eagle continues to fly under the radar. First and foremost, it models up an options analytical software as a low to no probability of profit trade. It models up in your analytical software like there's no way to make money. So people think about the concept of this strategy. They model it up in their analytical software, whether it be Thinkorswim or somebody else, and it looks like there's no way. And I'm going to show you several real examples of that. So in this modern day of information technology, with anything you want to learn about anything you want to learn about is available at the click of a mouse or through an internet search. So how is it possible that so few traders know about this approach? However, this is far from the truth, as you are about to see. In fact, the probability of profit is excellent, and the risk to reward ratio is also extremely attractive. So most of you are very familiar with risk reward profiles drawn in analytical software. This one is all hard. You can hardly see the risk graph behind here, but if you look at my cursor and it's running up this blue line and across and on down and through what we call the zero line on a P&L risk graph, and comes down and shows you what the worst possible loss is, yes, you recognize that as a iron condor. I put a bunch of labels on here. We're not going to go through them all, but the point here is that there's a lot of information available on analyzed software P&L risk graphs: max profit, max loss, expiration cycle, risk graph. Today, the purple line is the today P&L risk graph. If price goes up here, this is how much money I'm going to be down. But if price goes up to here and waits until the end, when on expiration day, I'm going to actually have all of this profit, my max profit. But if it goes up there too fast, I'm going to be exposed to a loss by the end of the day today if it moves all the way up there too fast. So all this information is available on P&L risk graph. An iron condor is a four-legged strategy, as is the double eagle, but they're very different strategies. The thing about this risk graph is that iron condors are made up of vertical spreads. They're made up of contracts that all expire on the same day. The blue line here remains the same, whether you look at this graph today or tomorrow or the next day, if you put this trade on for $300, that is your max loss, regardless of whether you close the trade tomorrow or wait till expiration today. That's the most you can lose. What's the most you can make? About $200. Exactly $200 is the most profit you can make on this trade, less commissions. And this is stagnant. This is stationary. This will not change on any vertical strategy. When you put the risk graph on it, it is what it is, and it isn't going to be anything else. With horizontal trades like the double eagle, the blue line is not fixed. Now the purple line is not fixed on this vertical type of a trade that we call an iron condor. It moves with the market price and with the market volatility. It moves even with time. As days go by, this particular purple line will evolve and change, but the blue line will not. Time spreads, however, also known as horizontal spreads, like the double eagle, the blue line is not fixed. It changes and changes dramatically as the price and the trade evolve. So now let's get back to answering that question. Why is the double eagle the most underutilized earnings strategy out there? In the next slide is a risk graph of a typical double eagle as we see it modeled up in thinkorswim's analytical software on trade day, on the day you put the trade on. When you put that last risk graph up and the day you put the trade on, you could see, hey, I can make $200 and I am risking $300 to do so. I think you're going to begin to understand why many traders shy away from the double eagle. Stay with me, there's tons of good news to follow. But this is what a double eagle models up like on trade day. When you model up our double eagle strategy, it looks, the blue line is virtually completely below the zero line. And there's only a tiny peak, and many of our double eagles don't even model up with a peak above the zero line. They model up with that peak way down here, or worse. Many traders understand the concepts that make the double eagle work, and they model it up in software like this. It doesn't take them long to just shake their head and move along. This is disastrous looking. If you modeled up this trade, if you understood the concepts of the double eagle, would you put this trade on based on this risk graph? Absolutely not. No way. Remember what I told you though? The blue line here is not fixed in this unique event-driven time spread. Unlike condors and other strategies where all the options expire on the same day, in those vertical strategies, the blue line is fixed. It doesn't change. It stays the same from the day you put it on all the way through till those options expire. It's the same on the day you enter it, and it remains that way until the expiration day. However, with the double eagle, the software can only show you what it knows right now. Okay? So it's not the software's fault. It's the software doesn't know what's going to happen. Just like on the iron condor, the software doesn't know what's going to happen to price. But in a horizontal strategy, the software doesn't know what's going to happen to implied volatility. And that is the major reason why, along with time decay, that is the major reason why this blue line will evolve over time. We have some tools as double eagle traders. One we call the MST. That's the acronym for Management Statistics Tool. And our management statistics tool is something we've been building since 2016. And the data in our tool, the data in our master database goes back to 2014. The MST does know how much implied volatility is going to come into our options strategy. thinkorswim's analytical software does not know. But we keep track of these things, and we have statistics to back up our conclusions. Let's look at a real trade, a real double eagle trade. I shared at a recent MMU. MMU is another acronym that we use at Double Eagle. MMU stands for monthly meetup session. We have monthly meetup sessions for all our Double Eagle traders. We get together once a month. Not only that, but we actually have daily meetups. We have a private Discord channel too. But we have the big event once a month. This coming April, we're going to be celebrating our 4-year anniversary of MMU sessions. We started them right in the worst part of the bear market of the COVID crash. That's when we started having MMU sessions, April of 2020. So we're coming up on our 4-year anniversary, and we haven't missed one yet. Once a month, second Tuesday of the month during market hours, second Tuesday of every month. So anyway, if you have a trade idea to share, if you do join us and become part of our community, you'll be able to join us in the MMU sessions. You can share your trades, you can share your thoughts, you can share your questions, your spreadsheets, your studies that you're working on. So I shared this trade at a recent MMU. And by the way, we record all our MMUs, and those are also available. So if you go back through our recorded MMUs, you will see this trade as I showed it live as I was in the trade, or just right after I closed the trade. Showed you all my moves, what I did, how I managed the trade, if I adjusted it, how I adjusted it. All those things are given away at the MMUs. Okay, my monthly meetup sessions. So here's a trade, $8.29 debit. So the most that I had was exposed to on this trade was $829 per contract. I don't know how many contracts I did. Maybe I only did one. I don't remember. We might see in the next few slides. Let's see here in a minute. But this is what it looked like when I first put the trade on. Only a couple tiny little peaks above the zero line where you could possibly make profit. And if this was like a vertical, would you put this on if you knew this blue line couldn't change for you? There's no way you would take a risk on this. $829, and you got nothing but a very little tiny window here where there's just a little bit of profit. Another little window here with the same, right? But guess what? I was able to close this trade for 95% profit against risk in 1 month's time. I almost doubled my money on this trade. This screen capture right here shows what the trade looked like in risk profile the day I exited the trade 1 month later. Yep. Now, we don't hold all our trades a month. We hold some of our trades. I've had lots of times when I actually have 20% profit in one day. You know, I'm not going to look a gift horse in the mouth. I might take that 20% and just reopen the trade again later and double dip on it, right? But anyway, I've got hundreds of trades that I could show you. Actually thousands, our database, but I've got hundreds and hundreds of live real trades that I've done and that other traders have done. Our database has over 5,000 back tests. That's where we get our data from. It's from our master database. This double eagle worked out perfectly. I call these ones dream eagles. They don't all, I'm not proposing and suggesting that you're going to make 95% profit and double your money on all your trades. That's not the case. But you will see that, you know, we have lots of trades that only bring 17%, 35%, 60%. 2%, right? And we even have trades, of course, occasionally that lose money. So anyway, looking at the previous slide, you might ask, how would I know that this risk graph is going to evolve and look like this in 4 short weeks? Don't forget what I told you just a few minutes ago. The software only knows what it knows. In other words, it can only predict the future based on the current set of historical statistics. At doubleeagleworkshop.com, we have a research team that is on task. Through our work, we know how to manipulate the software to provide it additional information to correct the P&L analyze software risk graph prediction model. I will show you a sample of that momentarily, just a moment. Our research team has been collecting information for many years on all of our stocks. Our database goes back to 2014. One of the pieces of information is how much IV build each stock has experienced from trade day through the expiration day. With that information and the knowledge of just how to manipulate modeling software, we can correct the risk graph before we enter the trade to better visualize its potential. We teach all of this in the workshop, and as participants, you will have access to our MST, which provides this proprietary collection of data. You too will be able to do what I show you here with uncanny results. Earnings traders are familiar with IV crush. If you've been trading options at earnings for any time at all, you are familiar with the term IV crush. For those of you who are not familiar, let me very quickly explain. Implied volatility is a powerful force that has very much to do with the value of options. We approach a stock's earnings date, the anticipation is growing. This fuels the demand for options, and as demand increases, so does the price of options via something we call IV, or IV building into the earnings date. Will the company meet the street's expectations? All the traders are wondering and guessing, analyzing and reading articles, doing their technical analysis. What if they beat the street? Or, oh my, what if they miss? Bad things can happen. Stocks can move huge percentages in one day. In fact, even in the overnight, as you all know, upon an earnings event. So the anticipation is building and growing, and it happens over many weeks of time. Many earnings traders are looking to exploit the IV crush by selling naked strangles and iron condors and such. Those types of strategies are what I teach mainly over at optionslam.com. Those are trades that you put on right before the earnings and you hold through the earnings, and you're looking for the implied volatility crush. This is very different than what we do with the double eagle. Others only fear the IV crush in the hopes that it will not destroy any hope of profit in their back ratio or their long calls or their long puts. But when the earnings are finally released, not that these other strategies are wrong or bad in any way. Long and short verticals are great. You see, what's cool about the double eagle is that it's a pre-earnings trade. I like to think of earnings trades as three types of, I think there's three types, okay? There's pre-earnings release trades. Those are trades that you enter and exit before the earnings ever come out. That's what the double eagle is. Therefore, we are not exposed to the wild price swings of stock after the earnings comes out. We're out of the trade with our profit, and we're gone. Then there's the through the earnings release trades. That's what we mainly talk about at optionslam.com, and that's what optionslam.com data is mainly used for, is for traders who like to focus on that, which is most earnings traders focus on that. And then there's, of course, post-earnings trades that you don't even put the trade on until after the earnings comes out, right? So I was just, this past year, I was pounding the table all last year in OptionSlam webinars that I put on, every other week about risk reversal and single winged iron condor and, some variety of butterfly setup, all as through the earnings type trades. But if you like trading through the earnings release and take some higher risk trades, you still can. You can trade the double eagle, be out of that trade before the earnings is even announced, in fact, the week before, and then you can take your profits from the double eagle and parlay those profits into other through the earning release strategies, such as iron condor or back ratios or risk reversals or SWICs or whatever you want. Personally, I don't trade through the earnings release very much anymore. I just trade the double eagle. The inflated implied volatility pops like a balloon. Options premiums get decimated. This is what we call, let me read the slide. Both puts and calls this happens to. Implied volatility crush. Admit it, you've been there. Bought a call because you were confident the stock would go up after earnings. And you were right, the stock did go up after earnings, but somehow you still lost money. That's IV crush at work. Before IV can crush, though, it must first grow and build. Implied volatility must grow and build into the options premiums. What most traders forget about is that before it can crush, it must first build. This process starts many weeks before the earnings event. As double eagle traders, we exploit what most people don't even see, the IV building and supporting option premium against theta decay. But not all options get IV built. So we sell those options and benefit from the theta decay that they provide. And we buy the options that do not get the IV build. So this is another trade I shared at a recent MMU. I'm not the only one who shares at MMUs, by the way. Patrick from Canada. We got John Eckenrode from Catonsville, Maryland. Always comes into, he's a very frequent presenter. We have, he brought to the table a really interesting study of how much effect does the VIX have on the double eagle. John, by the way, was one of those traders who took the very first double eagle class back in 2016, and he's still trading the double eagle today. It's his main strategy. Other frequent presenters are Tony, who's all the way from on the Bay, he calls it. They're in Amsterdam in the Netherlands. We have presenters from the UK. Leonard has presented. Let's see. I can't remember them all. There's so many. Okay, so I'm not the only one. Lots of presenters. Tony was just back here a couple months ago with another presentation on anchored VWAP. Very interesting stuff. This is a double eagle. This is I presented this in an MMU. It was $5 per contract, so I got $1,500 at risk in this trade because you can see I got 3 contracts. And it models up and it looks like doo-doo, right? Doesn't look like there's very many possibilities of making money in this trade. And this is why traders shy away from this setup, because it just doesn't look good. This is the main reason I believe why traders shy away from this. But here's the trade. Now this was not what I call the dream eagle, right? So during the MMU sessions, I show all my trades, winners and losers, okay? Most of the other presenters don't because it takes me a half hour, 40 minutes just to get through my trades. But I show everything, all my adjustments, when I adjusted, I lay these trades out as they evolve right on a price chart, and I highlight the days of action with white oval highlights. So this means I did something on this day. And in this case, I did a trade and I bought 3 contracts at $5 each. And I did not make any adjustments on this trade at all. And I ended up closing the trade right here on these 2 days for an average of 24% profit. So that is whatever, you'd have to do the math, but 24% of $1,500, that's what the profit was on this particular trade. Nothing's record-breaking, but very healthy profit. Entered this trade on 2/9/23, okay? So this is exactly a year ago. February of 23, I entered this trade. Again, it looks like caca. Excuse my French. This is the Analyze software prediction of what the P&L will look like on front expiration day based on everything the software knows about this stock's history, about the current IV levels, about the time to expiration, and about current interest rates, et cetera, right? So that all that information is plugged into the analytical software, and this is what it spits out. The next slide is a screenshot taken immediately after this one. But I added immediately after me, meaning The same day I put this trade on, but before I put the trade on, I modeled in my anticipated IV build. I went to our MST, which I have open on my desktop every day, all day, and I just go to my MST, and it tells me how much IV to expect. How much IV build between trade day and front expiration day can I use to correct the software modeling? So the next slide, I didn't wait until expiration day to show you, to take a picture of the next slide. I actually modeled it in right then and there before I even entered the trade. Does that make sense? With information provided by the Double Eagle Management Statistics tool, we expect the risk graph to look like this come front expiration day. You see here, I got to grade out exactly how much IV I modeled in, but I modeled in a number of IV build from the MST. And by modeling in that IV and using the software tools, then this risk graph moved completely above the zero line. You see that? Remember now, the blue line is fixed in vertical trades, but it is dynamic in horizontal spreads, such as the Double Eagle. So it doesn't do this overnight. This happens over weeks, several weeks of time. Somewhere typically around 5 weeks of time is what we use for our modeling. Not that we're in every trade for 5 weeks. Some of the trades were in for even longer than that, 6 and even 7 weeks. Some trades were in a lot less than that. You know, what happens to price and what happens to the stock, you know, oftentimes dictates when we need to get out of the trade. We can't always hold our trades all the way to front expiration day, although that is when the most profit is available, as I'll show you in a really important slide coming up. So let's go back to this trade that was live during March of 23. And I've removed the I've got it here. I had it grayed out on the screen, but it was 22 points. I removed that modeling, okay? And I took the 22 points out of the modeling software. And this is what it looks like without modeling in the implied volatility build. So there are also other criteria that goes in. So modeling in the IV build is just one of the many things that we consider before we make the decision as to whether to enter the trade or not. Just because the picture looks pretty doesn't mean that that it meets all of our conditions as a desirable position to enter. Okay, so we can't get in every trade every month. Image was captured on 2/22/23 noon Eastern Time. Trade entered on 2/9/23. So I entered this trade on February 9th, and then this slide, this screen capture was taken, what, a couple weeks later. As you can see, the peaks that peak above the zero line here are a little bit bigger, and the sag between the tent poles, we call it, if you imagine this looks like a circus tent, a two-ring circus tent, so we call these tent poles. And the sag between the tent poles has also come up from where it started. But I don't need for the blue line to get above the zero line. I already have $339 of profit against $1,340 of risk. I got 25% profit in this trade already in what, 13 days. Now, does that always happen? No. Can I guarantee it's going to happen all the time? No. But most trades, this is exactly what we expect to see. All right, so let's go. 25% profit after only 13 calendar days. But then look what happened. The very next day after I took that screenshot. I don't take screenshots of all my trades every day, okay? I take screenshots when I think something important has happened, and I take screenshots when I take action. So right after I took that screenshot on that day, day 13 calendar day, this stock experienced some bad news. Some news that was specific to the stock came out. and it took the stock gap down. The news came out overnight. It gapped down, and my 25% of profit had disappeared. The bad news, now my P&L is now underwater due to bad news in the underlying stock. Things go wrong. We teach you how to adjust your trades when things do go wrong. We also teach you how to resist adjusting when things go wrong. When to adjust, when not to adjust, how to adjust, and certainly multiple variations of adjustment techniques. We even provide a adjustment matrix. What I did to manage this trade is I didn't do much at all, except I held it. And fortunately, it came back into profit, and I closed the trade for 15% over these 2 days. So you got to know when to hold them and when to fold them. Sometimes, like I said earlier, just circumstances cause us to exit a trade. Even if it is slightly underwater, losing a little bit of money, the circumstances and the risk to reward and evaluating what the risk to reward has changed to be now might cause us to exit a trade much more prematurely than we would have liked to. The expiration dates chosen for the trade must follow the guidelines in their respective relationship to the earnings date itself. You need to know which options to buy and which to sell. Timing is critical. Don't enter too early. Waiting too long decimates the risk to reward ratios. Our earnings date research is critical to the success of the Double Eagle trader. We have developed a sophisticated set of tools to predict when the next earnings date will be. Because I have to tell you, we put on about 2/3 of our trades. The company hasn't even announced yet when their earnings date is going to be. But we have skilled traders doing the work behind the scenes. We have proprietary prediction processes that we go through, and we are very, very good at predicting when the next earnings release is going to be. And we need to, there's some great advantages in trading what we call estimated date trades. And about 2/3 of the trades that we do are estimated date trades. In other words, we are putting the trade on before the company has even announced when that date's going to be. More conservative traders avoid the estimated date trades altogether. Us seasoned traders, we trade them all the time. However, we cut our size down because there's not only, the reason we trade them is because they're setting up, and there's opportunity for more profit in estimated date trades than many of the confirmed date trades. However, there's more risk, because if we get the date wrong, the trade becomes a loser instantly. So if I don't have time to go into that, but in the workshop, that is one thing that we will spend a lot of time talking about. And how do we protect ourselves? How do we trade those estimated day trades? What are some of the precautions we can do in setting up our trade? We have some variations of the Double Eagle. We don't trade them all exactly the same. We have several variations of the Double Eagle that we utilize. So let me move on. Reason 2. So the reason 1 why the Double Eagle flies under the radar of most traders, right, is because the risk graph looks terrible. But the second biggest reason is even traders who discover how powerful the strategy is cannot find the time to stay organized. They cannot find the time to keep ahead of this trading cycle and the earnings cycle, because we're putting these trades on 5, 6, 7 weeks ahead of the earnings. Most traders are concerned about what stocks are reporting earnings this week. We're not. We're concerned about what stocks are going to be reporting earnings 5, 6 weeks down the road. And to keep track of all of that is a big job, along with all the statistics of how much IV built, how much the debits were for the trades. We keep track of what the strike spreads are. We keep track of all kinds of information and provide it all in the MST. Reason two why the double eagle continues to fly under the radar of most traders is there's too much work to do. And we have a team of people all working in the background to accomplish it. I used to do it by myself, but before I brought this to the public and started teaching the strategy, I used to do all that work all by myself, for myself. And then it just got to be too big for me, and especially, well, I'll tell you in the workshop more about that. No one person could possibly keep up with the work that it takes to gather all the information and maintain it all in an organized fashion like we do. Believe me, I've tried it. It requires a team effort. Our solution is we put together a team of traders. We share the information. We collect data, estimated earnings release dates. We do the estimated dates. We spend a lot of time every week, and we consult with each other. So that we can inform our members to enable them to make informed trading decisions. We do all of the above, but by providing the management statistics tool, more commonly called the MST. And here is a screenshot of a MST. This is a screenshot of a management statistics tool, and our number on Monday, next Monday, a week from yesterday, will be our first class after the Saturday orientation, and I will go through this MST in detail of every column, exactly what everything means, how we use it, how to interpret all of this information. I can tell you that this means trade day. I'll just tell you that what we're doing here is we're keeping track of all the stocks that are coming up for trading 2 weeks from now. Here's the stocks that are coming up for trading 1 week from now. Here's the stocks that are coming up and available to trade today. Not literally today, because this is a screenshot of a MST from some months ago. I don't even know when. Lots of valuable, powerful information, and we use a lot of this information, like the DPR and the SPR, the IV build, all of these numbers all have to do with IV build. The back expiration IV on trade day, average and median and mean. So let me move on. So this is mislabeled. I did not just enter this trade. I did enter this trade end of day 8/29/23, but it wasn't yesterday. Okay, this is August 29th of 23. So this is last summer, and this is an older slide that I stole from the previous workshop from last September. As usual, when entering the double eagle, the risk graph looks terrible. Let's let this be our secret, though, okay? Because it is still the best kept secret in the world of options trading. And I've had a lot of traders try to do this on their own without the benefit of our training and our tools. And then we've got a lot of tools. You'll see them at the website. We're going to go visit our website here in a minute. We have 4 opportunities a year. We don't need to trade this particular stock every quarter. If it doesn't set up this quarter, we just pass on it. Not every stock sets up every quarter, not by any means. And then you might not get filled on a trade. You might say, oh, I'm willing to pay up to $500 for this per contract. And if you can't get filled at $5, you can just pass it. We teach you not to chase price too, okay? So anyway, you can see that this trade was already up in profit just 3 trading days later. This is what's mislabeled. This was not taken 2 hours ago. It was taken 2 hours. It was taken 3 days after the previous screenshot. Anyway, the point is, oftentimes we have substantial amount of profit in a trade in a very short time. That's why I say, if I'm up 20% in 2 days, I'm going to take at least part of my profit off. Okay? We teach all different ways to manage your profits, but that's one of to scale out over time. This is a good example of here's a stock that that I trade. You can see each of these. Here's the earnings event, right? There's the earnings event down the bottom of the screen. You see the bubble, and here's another earnings event, and here's the beginning of a trade at the time this screenshot was taken. Okay, so there's another earnings event on down the road off the screen here. So let's see, trade entry on this day for $1.44 per contract, $144. Then did a management technique we call rolling the shorts. Okay, I can't go into it right now, but rolling the shorts and brought in a 51-cent credit. So now my total amount of money at risk is under $1. Okay, it's like 90 some cents. And then closed half of the trade, closed half of my trade, half my contracts at 35% profit. And then closed the other half a couple days later at 28% profit. Okay, here's another example of scaling out. Trade entry, $1.20. So I got $120 per contract, per double eagle invested here. Didn't do anything until right here on this day. Closed 1/4 of my contracts at 34% profit. Then moved forward a few days. Right here on this day, I closed. And by the way, I put these little white bubbles right on the candle at the time of day when I closed. So you could say, well, where was the price, Marco, when you closed and got 53%? Was it way up here? Was it way down here? Was it in the middle of this big red body? No, it was right there. Because I do these live. When I actually make a trade, I do these live so that I can answer questions like that at the MMU. And then let's see, 53% profit, and then guess what? Only 29% profit. And then here's opening another trade. This screenshot is our back test database. Not all of it. This represents, and the purpose of this screenshot is to point out that our strategy has an edge. Even if you put on, if you could, you couldn't, but even if you could put on every single trade. See, using back tests, we can put on every single trade. Whether they look good or don't look good, we can put on every single trade and in a back test mode. And then the purpose of this is to show you that out of, let's see, this is only stocks that are currently on our stock list. See, our stock list evolves. As things change, we take stocks off of our list and put new stocks on our list. So that's continuously evolving. This is only conventional double eagles. Well, I mentioned we have several variations of the double eagle, depending on the set of circumstances on any given day with any given stock. See, all of these things go to the reason why you can't do this, really, in my opinion, without the team we have built. And the MST and the MMUs and the Discord channel, without all the tools and the other supplementary files that we. So let's see, this only trades initiated after 8/31/2020 up through 9/1/2023. And I filtered out all the trades that were not on our list at the time of this, okay? So this, anyway, what this risk graph shows you is that there were 932 trades closed. 624 of them were winners. The average win was $204. There were 308 losers, which is 33%. So 67% winners, 33% winners. Total trades, 932. All closed trades, of course, because time has passed that now. 932 closed. Now the graph. Let's look at the graph. Please note that the prices and other statistics on this page are hypothetical and do not reflect the impact, if any, of certain market factors such as liquidity, very important, slippage, very important, and commissions. We teach about all of these things in the workshop regarding your real live trades. This is back testing. There's a lot to be desired about back testing, but there's also a lot to be learned from back testing. So the point of this slide is, without going and talking any further about it, is that we start out here in a time frame. Does this scroll down? No, I don't see the days here, but this is about 5 weeks ahead, 6 weeks ahead of the earnings event. And we start out with a P&L. This is the profit and loss of these 932 trades. And you can see as time goes on and we approach the earnings and the profits are climbing and climbing. And this is including all of these losers and all of these winners. And the net P&L happens to be the day before front expiration day, the highest profit. And you can see that that is right there at about 28%. Now, these are totally unmanaged. In other words, we put the trade on in a back test and we hold it all the way to expiration. We do not trade this way. We do not put on the trade and just hold it till expiration day. We do not suggest that you try it. We do not recommend that anybody does it that way. We manage our trades along the way. We manage our risk. We manage our profits. We manage our losses. Very recent. I just closed this a week ago. I just closed this trade a week ago. And I had 3 contracts on, $840 each. Okay? And here's what the trade, now this screenshot was not taken the day I put the trade on. The day I put the trade on, the price was down here around 300, okay, on this stock. I was not timely getting a screenshot of the day I put the trade on. I don't always remember to take a screenshot on every stock, on every trade that I put a trade on. I just don't always remember to do it. Let's go to the next slide. So I put the trade on February 1st, and then I took this next screenshot on February 8th. And you can see the trade was profitable, $470 on 3 contracts. Okay? On 3 contracts, $470. On this day, guess what? Notice that the entire expiration risk graph is now above the 0 line. Screen capture, 2/22/24. The day after I took the final double eagle off at 88% profit. I'm going to show you, I believe it's the next slide. And this is if I would have held the trade until front expiration day, this would have produced 120% profit for me, but I did not hold it that long. I'll tell you why in the workshop. I'll tell you why I did not hold the trade. And here is the trade. Here's that trade. It was a confirmed date trade. 3 contracts at $8.40 each. I paid 2.8 per DPR, which is a management statistics tool statistic, versus the management statistics tool suggested pay 2.5. Well, I paid more than the management statistics tool suggested I should have to pay for this trade, which is very handy to know that information. And I went with a trade that is a 50 SPR versus the management statistics tool said that our historical database SPRs were at 63. On this day, I took 41% profit. 2 days later, I took 41% profit on another contract. Remember, I only have 3 contracts. And then on this day, I took 88% profit right there. And on this day, I posted in our Discord, I posted coulda, shoulda, woulda. If I coulda, shoulda, woulda held the trade for 1, 2, 3, 4 more days, I would have had another 123% profit. But I didn't. I closed it at 88%, which is very healthy. This is another dream eagle. Here's my invitation to you folks. Thanks for sticking with me. Come fly with us. Come fly with us, Double Eagles. We are anxious to welcome you to our community of Double Eagle traders where you will enjoy many valuable benefits, including participation in our monthly meetup sessions. You can join our active trading discussions at our private Discord channel, live every day, and enjoy our insider information 24/7 through access to our proprietary information via the MST, our management statistics tool. There it is. It is all available and more for the really very low price of $1,285. And you're, oh, well, Marco, that's not just a low price. Yes, it is. It's a very low price. In fact, it'll never be this price again. We will be raising the price by the time we offer this workshop again next time around, substantially. This is, we have a small group. We want to keep it a small group. We don't want it is a secret. We aren't letting this out to the world. We're not broadcasting it across Twitter and Facebook. So I provided you, I know I have traders who've written me emails saying, Marco, I learned more in your free webinars at optionslam.com than I ever learned in the $5,000 educational course I took from, so I won't mention any names. Well, I do give a lot of information away for free at optionslam.com, but not the Double Eagle. Okay, you got to pay up $1,285. It's very low. It's 7 weeks of intense training. Okay, and hand holding, literal hand holding. We trade side by side. We trade together. So I provided you with solid evidence why you should participate in the Double Eagle workshop. It is sure to change your trading forever. Here's just a screenshot from our, this is just a little short snippet out of our Discord channel, out of our chat room. I've hidden the names to protect the guilty here. I've hidden the names of the stocks to protect our stock list. And here's somebody said, some of us have over 70% profit on XYZ. The better traders took partials off the table. I'm not one of them. I ended up closing with 20% profit. Same with this stock and that stock. I hated this week, although I made some money. Okay, so here's a trader crying that he left a bunch of money on the table. He should have taken his profits sooner. It happens to all of us. Some of us had over 70% profit on XYZ. The better traders took partials. Well, this is actually in reference to a trade that I posted where I did take profits off the table, and they were much higher than the 20% that this. But I make the same mistake sometimes too, where I leave money on the table. For sure. I just showed you one on that one stock just now, a minute ago. And then another trader chimes in and says, you shouldn't beat yourself up. You are an excellent trader. And I know the worst is when it feels like an unforced error. I'm not sure you should put this instance in that bucket. Cheer up. So, we're supporting each other there in the model. And people come in and ask questions about, hey, I'm thinking about putting this trade on. What do you guys think? Stuff like that. And then here's me responding to another chat up above. Somebody had asked a question, and I answered the question. And you can't see my whole answer here, but I'll explain it to you later. And then this person says, makes perfect sense, Marco, thanks, because I answered their question. You can't even see my answer here. Today I overcompensated and closed the whole XYZ trade 41% up. I know it will give the rest of you another 50%. So that's just one little snippet out of our chat channel. So the Double Eagle has spared many people from the demise of their trading careers. And I've got a bunch of testimonials. Then we've got some on the website. This was a very long email. Beth also, by the way, Beth is a longtime Double Eagle trader. Beth also has been a presenter at the monthly meetup sessions. Let me just read this one. I'm surely one of Option Slam's biggest fans, for I do very well with the Double Eagle strategy. Honestly, I was, because this is where she learned about the Double Eagles from Option Slam, which is where most people learn about it. Because like I say, I don't advertise this around the world. It's not on Twitter or X or whatever they call it now. I was just about to give up on options trading for it just seemed like another pipe dream. I am not saying the double eagle is easy, though. It is demanding. It requires concentration and staying on top of market conditions. All true. And then this was a very long email. I just took a couple quick paragraphs or sentences out of it. But from Beth, the double eagle is my main trading strategy now. And I have found by focusing on just one and not spreading my attention to other strategies, it has enriched and deepened my understanding of the whole process. I think you will understand when I say that after a while, you just get a feel about the trades. And that's so true. The more you trade it, the easier it is to just put a trade on without having to anguish over it. And this comes from doing the strategy over and over and over again under so many different conditions, meaning different market conditions. We can trade this in bull markets, bear markets, sideways markets. It doesn't matter. The double eagle always performs, always performs. The best kept secret in the world of options trading, for sure. Let me take you now over to the website and show you a couple things around the website, quick a minute, and then we will answer any questions that you have. So feel free to type any questions you have in the chat box, and I will take the time to answer any questions that I see in there in just a minute. Let me first give you a little bit of a tour. The website is doubleeagleworkshop.com. Isn't that convenient? doubleeagleworkshop.com. It is a workshop. It is a website dedicated to this strategy. Now, this details page is a little outdated. It needs a little bit of update. Details page updated by Thursday, but it just tells you, you know, in black and white, literally, some of the things that you're going to get as part of the workshop. Okay, and it tells you some of the things that are included with the course, not everything, because we've expanded the double eagle to have more. We keep getting better all the time. You know, we started out with the MST didn't come at the beginning. We traded a couple of years before we ever put the MST out. Then we traded a couple more years before we put the MMUs out. And then we traded a couple more years before we put up the Discord channel. So we're always getting better all the time. But let's see, testimonials. Please go to the testimonials page. Oh, I need to show you this. Bekeem was also one of our traders in the very first double eagle class. And he is still, Bekeem is a professional trader, and he trades, he comes to every MMU and shares his trades just like I do. Bekeem and I are there every month, never miss a month. I think Bekeem might have had to miss one or two because he had to go on vacation. He's got young children. Marco, as you know, he sends me this letter, and I didn't know this until I got this email. Marco, as you know, I took the Double Eagle workshop a couple of years ago. That was probably the best trading decision I ever made. I have exciting news to share with you. 4/17/18, it was announced that I won the fall 2017 through spring 2018 trading contest at optionstribe.com. I came in first place. I did it by trading the double eagle strategy exclusively that you taught to me and the other traders in the workshop. I can't thank you enough for the excellent workshop training experience. And since then, Bekeem and I have become tight. Here's the final results. Look at Bekeem. He's 36% profit against risk, and second place falls way behind him in the trading contest. And this was a verified contest where traders had to submit their trading records from their brokerage, because the winner of this contest got funded a $750,000. This is a funded account by a prop firm. Okay, that's why they have this contest. They have it twice a year, and the winner of the contest gets a seat on the prop desk, funded by the prop desk. Okay, so anyway, here's Nelson, brand new, our newest double eagle trader. I'm not going to read all these testimonials. Here's Mike. He's a longtime trader, but new to the double eagle. He's given up all his other trading, and Mike is a full-time double eagle trader. That's what he does for a living, trades the double eagle. Elias. So anyway, please come here. Please come here and read some stories. There's not too many of them. Here's John, longtime double eagle trader from 2016 again, one of the first, and still now today. I mean, I could go on, and what else can I show you? Once you subscribe to the, I'm going to go ahead and log in right now just so that you can see. You get a couple more buttons here. And okay, this button, here's the button I was looking for. Once you become a double eagle trader, after you've taken the training, in fact, you'll get this right on real early in the training. You'll get access, not right away the first day because I have to teach you how to use some of the tools first. But on Monday, next Monday, the 11th, that's when you'll get this. Will become live when you log into doubleeagleworkshop.com. You'll log in here and you'll be able to go to this button will appear on your screen, and then you can go to the management statistics tool. You can go to monthly meetups and take in the monthly meetups. By the way, are 2 hours long each, one a month. So there's a dozen for each year, and we're going on our 4th year of those. Here's where you sign up for our private Discord channel. Only people who have taken the training can have access to this. I often get asked the question, well, Marco, can I just buy the subscriber benefits? I don't want the training. No, doesn't work that way. The training is critical. It's very important that we train you thoroughly, because I don't want dissatisfied people. I don't want people to lose money. I want everyone to have thorough training how to trade the double eagle, and then you qualify for access to our tools. Double eagle support files. These are Excel files and PDF files and actual working Excel. Some of them are actual working tools, not and then of course email support, and I am available personally as well. You do not need to be a member of Option Slam whatsoever. Completely different, and in fact, to tell you the truth, you don't even need to be an Option Slam member after you become a double eagle trader. Option Slam is of very little help to double eagle traders, actually. Option Slam is more for through the earnings release events types trades. Double eagle is a pre-earnings release trade. It's completely different than what Option Slam does actually. So when you come to double eagle, okay, when you come to double eagle and you're not logged in, let me go back to being logged out. Let me go back to being logged out here. I forgot to show you a very important thing. You need to come into, you don't need to log in. What you need to do is you need to enroll, and you can enroll a free subscription and become a guest. That's not going to get you into the workshop, but it will get you into the website at least as a free guest. And then you can upgrade to a workshop enrollee. Okay, so you need to come to, what is it? Enroll, subscribe. That's where you need to go. You can become a guest, or you can just skip that part and go straight to becoming a workshop class enrollee and become fully trained in this strategy. And the fee is $1,285. It includes the first 3 months. It includes the first 3 months of well, it's gone now because I logged out. But the button that says subscriber benefits that has MST is very cheap. We keep that. We don't even make money on that. We just charge enough to pay our help to maintain that tool. Okay, and you get 3 months of that included with the $1,285 tuition, and then you. After the first 3 months, it's only $85 per quarter, not per month. $85 per quarter. So that, or you can get a discount if you want to pay for the whole year, which most people do. Most people just pay for the whole year in advance at $299, and that saves you like 12% as compared to paying $85 per quarter, not per month. So it's $299 a year. That's what it is. It's $299 a year to stay. And that supports us. It helps us pay for the website, helps pay for our developers, our programmers, our Excel experts, our IT people, et cetera, et cetera. And the people who maintain all of the data to keep the MST up to date. So $85 a quarter or $299 a year. Yeah, no problem. All sessions are recorded, and we have Dennis will be there to back up. So that way we're sure we're going to have a recording for you. And even the sessions that are live during market hours, all the Monday sessions, they all are from 11 a.m. Eastern time to 1 p.m. Eastern time. So 2 hours every Monday, starting for 6 Mondays in a row. So there's 7 classes all together. Oh, by the way, I can show you that. You go right here. This is really important. I'm glad you brought that up. Go to the workshop schedule page, which is right here, and you'll see, here's the schedule. Double Eagle free webinar. That's us right now, March 5th. Okay. Then orientation is Saturday, and then here's a brief description of what's included in what we'll be talking about in each class. And you see the first part of each class is review trade setups. This is a very much a teaching class, but hopefully we'll put some trades on right during class. And I'm pretty sure we will. We usually do. So, and then the next class is review any open trades, evaluate opportunities for new trades. Every week we have new trades coming. Every week, we have a busy season and we have a slow season. But even in our slow season, there's still opportunities for new trades. So we are trading this year round, every week of the year. We have our busy season and we have our slow season, but we're always trading the Double Eagle. 365 days a year, literally. So yeah, workshop schedule. Make sure to check that out. Make sure to read through those testimonials. They all tell a different story. They say things in those testimonials that I can't say myself. Only someone who's taken the training can say some of the things that these people say in there. Okay, what else? Who else? We got just a couple more questions. Absolutely. We are out of the trade long before the earnings comes out. If we join, will we see the previous real trades? I will show you so many trades, you will have access to everything. I'll show you so many trades during the workshop because I need to show you all different examples of different scenarios that happen. For example, price goes out of my range, out of my desired range. It goes out of the maximum profit area. How do I deal with that? Price goes too high. Price goes too low. Another thing that might happen, price stays in the middle. It goes in the middle and we don't get enough IV build. How do I handle that? Oh, my stock is having ex-dividend tomorrow. And I happen to have some in the money shorts in my Double Eagle. What do? I teach you how to deal with ex-dividends. I have some shorts that are deep in the money. I feel like I might get exercised against. I show you how to deal with exercise on assignment, how to deal with it, how to avoid it, how to manage it. Oh, there's bad news. Something happened. All of a sudden, there's bad news. My stock dropped 10% overnight or more. How do I deal with that? What do I do? Is there a way to get out of it? I'm in trouble here. How do I get? That's why the workshop takes so long, because I'm going to show you and teach you about all those. Go to the workshop schedule and read through. And this is not all the detail of everything that's going to happen. And I can't guarantee it's all going to be in this order because I got a bad habit of going off on tangents. One thing I can guarantee you is that these classes will go overtime. They're scheduled for 2 hours. They're probably going to go closer to 2.5, maybe even 3. Okay, that's it. I'm going to call it a day. The way to subscribe is come to doubleeagleworkshop.com, go to the enroll subscribe page right there, and you need to choose workshop if you want to become a free guest. You don't want to sign up for the workshop this time around. You're going to come back. Hopefully we have the workshop again in the fall. I can't guarantee or promise that. I can promise that the next time we have it, it will be more expensive. But if you want to just make sure that you get a notification the next time we offer the workshop, then sign up as a guest and we'll get an email out to you a week or two before the next workshop is scheduled to go. We won't be spamming you. We'll just wait until the next workshop is ready to go, and we'll shoot you an email just to notify you. That's what the guest can do for you. Guest membership can do for you. Doesn't cost you anything. And there's the workshop, $12.85. You can pay with PayPal or a credit or a debit card. There's, basically 3 choices, right? PayPal or a debit or credit card. Thanks, everybody. Thanks for being here. Thanks for your patience with my raspy voice earlier and for going way overtime with this presentation. I hope you feel like it was worth your while and you learned some things. It's a fascinating strategy. It's a fascinating approach to trading earnings. You'll learn so much about trading. That's the other thing I hear from other traders all the time. I learned so much about trading in the Double Eagle. It doesn't only help me teach me this great, wonderful strategy, but it's made me a better trader in all the other strategies that I do. Goodbye for now. I hope to see you Saturday in the workshop. Email me support@doubleeagleworkshop.com. Thanks and goodbye, and wishing you all good trading and everything else good in your life.